Hey everyone, Alan Mercurio back again. Wanted to give you a little bit more information to help you plan for 2021. Some of the things that we are looking at and talking about each week on a radio show that we talk about on WHAS. As far as planning, the show is called Retirement 360. We're on at 11 o'clock on Sundays and 10:30, I believe, on Saturdays. So if you'd like to tune in, catch up with some of the stuff that we're talking about for our planning purposes this year. One of the biggest things every year that we have to contend with is what we pay Uncle Sam. So with a new administration and President Biden leading the way, now we have to, or will be, looking to him to rebuild or restructure the tax plan in any way that he, chooses to do. There's a number of things that he's proposing. A lot of it tends to focus more on people making $400,000 or more per year. So if you're in that tax bracket, you definitely need to be paying attention to what's going on with the tax laws and how they're changing and what you can do to limit the amount that you're paying in. So we're going to be looking to try to dissect these rules and regulations as they are approved. Right now on January 25th, we haven't got anything approved yet, so it's just now in the talking stages. But I did think that it was important enough to at least bring it up to you to start talking about it and start thinking about it. Right now, everybody's kind of getting organized for 2020's taxes, so you're getting your W-2s in, you're getting your 1099s in, you're gathering all the information to take to your accountant or to sit down and do the taxes yourself. I would encourage you to start thinking about how much you are actually paying to Uncle Sam, and is there a way that you could start to minimize that a little bit, start to bring that down a little bit. Maybe it involves bringing a CPA or a tax person in to sit down with you at least for a couple years to make sure that you're getting everything, and then go back to doing it yourself if you're one of those that like to do your taxes yourself. But I think it's important enough to really think about spending maybe $200 or $300, $400 or whatever it is to hire a good tax person to really make sure that you're not missing something. I talk about it on the show almost every week. It's those really small hinges that swing the big doors in retirement. So you got to make sure that as you're building out your retirement plan and you're structuring everything, that you don't miss something, especially on the tax side. When you start to think about it, taxes are going to be the biggest thing that you're going to pay out of your retirement funds. So even if you're a do-it-yourselfer and you're managing your own investments, you're not paying anybody to manage anything. Let's think about how much you are giving away to Uncle Sam or could potentially give away to Uncle Sam out of the 401ks and the IRAs. Those are the types of accounts that most of us have used for all of our accumulation phase of life to save money in, because they gave us a tax deduction. Now we're starting to look at it and say, okay, well, how do we get this money out? I was asked just the other day about our thoughts about a Roth IRA conversion or a Roth conversion for this year. In my point of view right now is we know what the tax brackets are now, the minimum being 10%, I guess it's 0 being the minimum, but 10% being the start of the brackets, all the way up to 37%. So we know what those tax brackets are now. We don't know what they're going to be 10 years from now. So if you look at it from that perspective, if you're in a 10% tax bracket now, or a 12, or maybe even a 22% tax bracket now versus X, because we don't know what tax bracket that might be a year from now or 10 years from now, it's probably in our best interest to consider going ahead and doing some conversions and making some tax changes now when we know what these tax brackets are and at this lower rate, as opposed to waiting to what they could be in the future. I suppose they could be lower in the future, and we could end up kicking ourselves for paying the higher tax bracket. But I think right now we have to consider, at least with what's going on in the world over the last year or two, all of the stimulus money that's been added to the debt and where we are as a country with the debt that we have, that we're probably better off going ahead and paying that tax now. So if you haven't really sat down with your advisor and talked about converting some of those IRAs or 401ks to Roths, or maybe you don't have an advisor and you want to talk to us about it, we're more than happy to talk to you about it and sit down with you, map out a strategy. we do one of these reports that we do for our game plan is really, it's called a tax map, and it really looks at your current tax situation and tries to map it out as to what could be in the future. We can also plug in things like if you converted $50,000 from an IRA to a Roth IRA this year, how does that change your taxes? What does that mean for you to do that, or take that kind of make that kind of a move? The other thing that we've looked at is taking those contributions that you're investing in your 401k now, if you're in the last couple of years of work, maybe taking those and switching them over to the Roth conversion. There is a little warning there that you have to be aware of. A lot of the companies that offer the 401k Roth versions that do matching, they might not match in your Roth account. So you want to make sure that if you're going to make that move, if you're going to change your contributions, make sure that they're still going to do the matching in the Roth side. Otherwise, what you do is you match, or you put in up to the maximum amount to get the maximum match on the traditional 401k, and then you can switch the rest of it over to the Roth version. But anyway, I wanted to come to you today with a little bit of information on this. As we start to see some of these things change, we're going to put more content out there so that you know what's going on. We're right now in the process of building a master class that we'll do over at the University of Louisville to talk to people about tax planning and how important it is in your retirement plan. So stay tuned and make sure that if you're seeing this on YouTube, subscribe to us and hit that little bell so that if we put out some new content that you'll be notified right away that we're out there. And have a great day. Thanks.